Hey there, welcome to Neppy Invest. So another video where I focus on the Appendix 4Cs that were released in January. This is going to be part two. So the three companies I'll be looking at today in this video are going to be Elmo Software, PayGroup, and Nuheara. And the question whether these companies are a buy is going to be up to you. So the whole point of me doing these videos is to give you some ideas and possible some inspiration behind maybe further researching these companies, especially if you like what I tell you in this video. So let's get to the first company, which is Elmo Software. So this is a cloud-based human resource and payroll software provider. Ticker code is ELO. So a fairly large market cap of about 590 million. This is a company I have held in the past. And one of the main reasons I decided to cut them loose was just because the share price was going sideways, wasn't really doing a lot. Fair bit of revenue, 50 million, which is growing, and they are operating cash flow positive, which is a big tick, and annual recurring revenues at 74.2 million, which is growing also. One of the things I always look with at these sort of companies, these SaaS companies, is to look at the annual recurring revenue, look at the growth rate of that and compare it to the market cap. If you can times that annual recurring revenue by, say, roughly 10 times, that gives you a rough idea what the market could be. And in this case, Elmo's share price is a bit lower than that. So if you want further information on Elmo, just look at their Appendix 4C. They did give a fair bit of information, which I won't get into in this video. So this is their operating cash flow bit of the Appendix 4C. So receipts from customers is the main thing I always look at. And when I actually look at the receipts from customers, I tend to focus on the trend over time. So this number is taken in isolation, and I don't derive anything from just looking at that number in isolation. What I do derive in isolation, or what I do look at in isolation, and I can derive some information, is that bottom number, that's net cash from operating activities. That is positive 1.5. So Elmo is generating positive cash from operations. Now, they began the quarter with $130 million and finished the quarter with 71, which would suggest they are burning cash at a phenomenal rate. So you have to find out what they spent that money on. So you have to go to the investing activities section and the finance sections. And when you look at those sections, you'll know they spent $48 million on an acquisition and $8 million on intellectual property. And that's why their cash balance has been depreciated, has gone backwards by that amount. Now, I mentioned before, I always like to look at the trend in receipts, and in this, you can definitely see an upwards trend, the good sort of trend you want to see. So when I look at or calculate the compound quarterly growth rate, we get a number of 9.5% per quarter, which is quite good. Analyze, that's around 40% per year. And funnily enough, their compound annual growth rate in annual recurring revenue is growing at 43%. So that makes sense that you'd expect the cash receipts to be growing around that 40% range, just like annual recurring revenue. The other thing I always look at is price to sales with a company like this, and they're running at about 12 right now. So that's not overly high. I've seen some companies significantly higher than that, especially in America, which is suggesting to me when you get numbers like 50, that that space is running a bit hot right now. So this is the share price going back a year. You can see the share price really hasn't been doing anything. That's the main reason I did send out to it. Just didn't see any trend. We might be, if you just work really hard at it, you might see a bit of an upward trend since September. So I've put in a sloping brown line there to maybe suggest that there is a trend over the past 5 months or so. But again, this is not a company that I would say is undervalued, overvalued. It's probably about right valued right now. And that the share price chart would suggest the same sort of thing. But I think this is a growing company, and any sort of weakness in the share price, if it goes back to those COVID-19 financial panic lows of about $4, that would be a good buying range. The next company is PayGroup. Now, I've done a video on this company. This is a fairly similar company in the same sort of space as Elmo, so the specialist provider of payroll and human capital management solutions. But when you look at some of their financials, they are a little bit cheaper, relatively speaking, than Elmo Software. So market cap of only 58 million. And when you look at the revenue and operating cash flow, you can see some good numbers there, particularly the operating cash flow, which is 3.6 million. So it's only half of what Elmo, but when you look at the market cap, it's almost 10 times less. Revenue only 13.5, which does suggest maybe their margins are quite good. So again, if you need any further information on PayGroup, I am quite bullish on this company. You can look at their Appendix 4C released on the 28th of January. Now, this is straight to their cash flows from operating activities, which is always what I like to look at first. Receipts from customers, 4.6 million, but again, in isolation, that means nothing. We have to look at the trend. And then right at the bottom line, what you can derive something from this little table, I suppose. What do you call this? Yeah, table. Is they are cash flow positive to the tune of 632,000. So nothing too great there. And particularly if you take away the government grants and tax incentives, we are looking at an even smaller number. Now, they began the quarter with $5.3 million in cash and finished it with $4.9 million. So they did go backwards in terms of the amount of cash they are holding. So even though they were cash flow positive in operations, in financing and investing activities, they did bleed some cash there, and most of the cash they did bleed out were in regards to intellectual property. So you can see investing activities led to overall cash flow out of business, and IP, intellectual property, was the main reason behind that, which is not that bad. So this is the cash receipts over the past, well, ever since they IPO'd in just before July 2018. You see fairly good uptrend. They had this one really awesome quarter in April 2019, which seemed to be a bit of an outlier. Overall growth rate since July 2013 has been 25% per quarter, but that's probably because they started at a low base. If you just look at the past 4 quarters, they've been growing at 10% per quarter. In fact, the last 4 quarters, they've almost been going sideways. Now, the price to sales is only 4, so compare that to Elmo, which was 12. So you would probably say right now, PayGroup is maybe the lower quality business in terms of financials, but it is also the cheaper. So the market is sort of pricing in the fact that Elmo is probably the higher quality business. But if you're looking at a better value business, PayGroup could be the direction you go with a price of sales of only 4. So this is the weekly chart of PayGroup since IPO, and you can see it's been doing nothing ever since it IPO'd back in, would have been May, June 2018. There is a possibility we are starting to see potential of a start of a new uptrend developing. If you look at the daily chart, we also can see that's corresponding with an increase in volume over the past few months. And that's the first thing I really look for, is increasing volume, which shows the market is getting interested in a company, particularly if that interest is being in fund managers. I really like to see fund managers starting to buying into a company, and that's what we might be seeing with PayGroup over the last few months. So the last company I'll be going to is Nuheara. This is a company I don't know a lot about. I do know them a little bit. I have been following them on the sidelines for the past 4 or 5 years, just because they do offer hearing solutions for people who haven't really been served up until now. For instance, I really like noise cancelling headphones, particularly now work is getting noisier and noisier, and just need that noise cancelling, and they provide that sort of thing. So ticker code is NUH. Now markup 78 million. Revenue and operating cash flow. Now, got to take that with a grain of salt, because this is based off last year's numbers. So I'm looking at the annual report or half-yearly report, and revenue of 1.7 million. So just look at that number and just remember the number of revenue, 1.7. Operating cash flow negative to the tune of 5.4. So there is a reason I'm doing this company, and you'll see that reason in the next slide. If you want further information on Nuheara, again, they released their Appendix 4C on the 28th of January, just like a lot of other companies released their report on that day. Now, here is the reason I've decided to talk about Nuheara. Receipts from customers. So remember that revenue line for the previous year was like 1.7 million. In this quarter, they pulled in $4.8 million in receipts. And as soon as I saw the number, I went, whoa, that's a bit out of the ordinary for Nuheara. What's happening? Have they reached an inflection point? And you go down to the bottom line, they were cash flow positive in operations to the tune of 1.8 million. Again, that was a big number, but if you take into account the government grants and tax incentives, which was 1.5, that number's quite a bit lower, so it's only about 300,000. Now, they do have some little notes at the bottom then. The first note is the receipts from customers includes prepaid orders from customers' IQ Buds Max, not recognised as income until product has been shipped. So it looks like they're including receipts for future orders in there. So I'm not sure how long those prepay orders are going to last, but this could be a good sign that Nuheara, or not even a good sign, but a sign that Nuheara has reached an inflection point and the company is moving onwards and upwards. Now, they began the quarter with $1.5 million in cash and finished it with $2.4 million. So upwards of increasing cash to the tune of almost $1 million. They did spend $1 million in intellectual property. I haven't put it here, but I would assume that maybe they did a capital raising. Well, no, it's net cash from operating activities. That's why they've gone forward by that amount. So if you include that $1.8 million in operating activities to the beginning cash, you got $3.3 million, and they've gone backwards from 3.3 to 2.3 because of intellectual property. So that's the reason why they've only added cash of 800,000 instead of 1.8 million. Now, I've gone to Section 8 here because in Section 8, what you have to do is you look at your cash burn for a quarter, and then you look at the amount of cash you have on hand, and if there's less than 2 quarters of cash on hand, you have to give a little report on what you're going to do to fund your operations moving forward. Now, I think Nuheara have not really understood what they're supposed to do here, because they actually had positive cash this quarter to the tune of 1.8, and they finished the quarter with 2.4. They've actually mentioned here in the ASX, if the entity has reported positive net operating cash flows in item 1.9, answer item 8.5 with NA, because they don't really have to, because they have positive cash. Otherwise, a figure for the estimated quarters of funding available must be included in item 8.5. So they've sort of misread that because they were operating cash flow positive. They didn't have to do anything else here. They could have put just an NA here, and they filled in all section 8.6, 8.61, 8.62, 8.63, and the answer, and they didn't have to do that because they were operating cash flow positive. Maybe they did that because this is the first time they've been operating cash flow positive, and they were a little bit confused. So that was a funny thing I found in this Appendix 4C, where they did way more work than they had to, but that's nothing to be concerned with at all. They just went over and above what they had to do. So this is the receipts history for Nuheara, and you can see the potential that this quarter could be an outlier. So we saw some massive growth from the previous quarter to this quarter. You can see it's fairly lumpy, up and down the cash receipts over the past almost 3 years, or actually almost 4 years now, and then all of a sudden this massive spike in cash receipts. So this is a company I'm going to have to do a little bit more research to whether this quarter was an outlier, or maybe it's a sign of things to come. That's the whole point. So if you are a Nuheara investor and you know a little bit more than I do, maybe it's a good idea to leave a comment. So compound quarterly growth rate, if you include this quarter, is they're growing at 17.1% per year. Now what I've done is taken away this quarter, and their growth rate is 1.2% per year. So nothing too great when it comes to the growth rate in receipts if you take away this quarter, which I'm not sure if you can do or not do at the moment. So I'll be waiting with bated breath for their April 21 Appendix 4C, or even any sort of follow-up announcement to see how Nuheara is doing, because what the products they do have are sort of intriguing and interesting to me. So this is the 5-year weekly chart. So I have been following this company for a long time. In fact, at one point, 2017-18, I was thinking, would this be a good investment for the long term? I decided not to in the end, and it's probably a good decision at that point, because we did see the share price go down quite a bit from early 2018 all the way down to the COVID-19 financial panic, when the share price got lower than 2 cents. We have seen a return to form over the last few months. Share price has gone up to 4.5 cents. Interesting thing is, we didn't see much of a market reaction to this announcement. So my thinking is the market knew this sort of Appendix 4C was going to happen with Nuheara. So that's all I got in this video, this Appendix 4C, 3 companies to maybe buy if you do some follow-up research. These are the three companies I do follow. So Elmo is a company I've held in the past. PayGroup is a company I've almost nearly bought in the last few weeks. And Nuheara, I've been following for a few years. I don't know a lot about them. I wouldn't be able to answer any questions you have about their products and why they had such massive cash receipts this quarter. I have to delve a little bit deeper into their Appendix 4C. They did give a bit of information in it. Otherwise, that's all for this video. And again, I'm not a financial advisor. So if you need to seek financial advice, make sure you seek out a qualified expert who can speak to your own financial circumstances. That's all for this video. Have a good day. See ya. I did this in one take. Woohoo!